Hi, this is Daniel with Unrivaled Investing. Today we are doing another uncut video, this time on Tesla. It has had some crazy growth in the last few days, really the last year, so I wanted to do an uncut video. I usually have uncut and I also have the cut or the nicely edited videos. Those are for the multi-baggers that I've done where I'm laying out or talking about companies that could potentially go up hundreds or even thousands of percent in the future. The uncut are just companies or situations that I think are interesting, usually more of a personal dialogue. Let's just go into this. So here's the disclaimer. Check it out on your own time. What am I trying to bring to you with Unrivaled Investing? The first is to find potential multi-baggers. So, ideally, if you subscribe to this channel or you're interested, I will be bringing companies to your attention that can go up hundreds or even thousands of percent over time. The other aspect to this that you don't get in other YouTube channels or elsewhere is that I have skin in the game on this. Oftentimes I will disclose when it's something that I own, and I also do my own personal portfolio updates so you can see how I'm doing, what I own, what I find to be interesting. So it's about sharing my own personal financial journey. And if you're interested in either finding companies that can go up hundreds of percent or sharing a financial journey, your own financial journey with me, my financial journey with you, hit that like button, hit subscribe so that way we could do this together. So the first thing about Tesla is that I do not have a horse in this race. I don't have any positions, and it's a super interesting company. Elon Musk is an incredibly impressive person, what he's been able to develop, as a CEO and innovator, entrepreneur. But I do not have a horse in this race, so hopefully I'm coming across as an impartial observer, sort of sizing this up. So and honestly, look, the way the stock has moved, it's gone up like 5 to 6x this past year alone. So it's been a mistake being a horse on the sidelines or not having a horse in the race. So what is going on is Brian Feroldi on Twitter calls out the Tesla market cap is now officially $100 billion higher than ExxonMobil. Holy moly. And you can see a lot of that happened really this year, in the last few months, as it's gone exponential. You're also seeing headlines about how Elon Musk is now worth more than Warren Buffett. I mean, Warren Buffett is supposed to be one of the greatest capital allocators of human history, and now Elon Musk is worth more than he is, at least on paper. The reality is I'm not so sure about how these headlines are calculating it, because are they factoring in that Warren Buffett is giving away literally billions, if not tens of billions of dollars over time? Because if that's the case, I don't think Elon Musk would pass up Warren Buffett if you were to include the stock that he's subsequently given away to like the Gates Foundations. But anywho, that's just a few $billion between friends. So, but there is truth in calling out that this might be the changing of the guard, as Abe Pompliano called out on Twitter. Elon Musk rockets past Warren Buffett on billionaire rankings. Like, is this the changing of the guard? Like, we're a new entrepreneur capital allocator, because that's what at the end of the day a CEO is. A CEO is someone who allocates capital on behalf of the company. Is this a changing of the guard? And there is truth in this. Let's look at several of the Berkshire Hathaway subsidiaries. You have Geico, which is an auto insurance company. You have Burlington Northern, the railroad. What do they ship? They ship a lot of coal. McLean is a trucking company. Pilot Flying J, that's a truck stop, pit stop for fueling life's journey. So it's diesel sales for these trucks. Berkshire just announced one of their larger deals, a $10 billion deal for Dominion Energy, where they agree to sell gas transmission and storage assets. I mean, all of these enterprises can easily be disrupted by Tesla in the future. I mean, you look at their autonomous potential vehicles in the future, or you look at Tesla potentially getting into the insurance space to insure their own cars. That would be a big hit on Geico if all of a sudden, hey, more robots are driving the cars. Why do you need this insurance? Or there's a dramatic decline in insurance premium. The coal these railroads are carrying, you're certainly seeing a decline in that. Same thing with McLean. What if, McLean has a whole fleet of diesel trucks? Would it be easier if you had autonomous, can a new upstart, defeat the incumbent because they can now, let's say, buy a fleet of autonomous trucks. This is not right today, but this is the future we're heading to, and that's how companies are priced. Same thing with companies that sell diesel or even gas transmission assets. So let's keep digging into this. The reality is, a lot of Berkshire subsidiaries will face disruption over time, and Tesla is going to be, Elon Musk in particular, is going to be one of the driving forces of that. And a lot of these things are good for society. Like I personally wouldn't like to be paying as much in Geico insurance premiums. I do it because they're affordable. But hey, if I had a robot driver driving me around, heck, I'd take that, especially if they were cheaper for me. So back to Tesla, what is going on? You could see here, it looks like StockTwits was tweeting how Elon Musk called that the stock price was too high after it rebounded in March and April from a low of around 350 to like 750. And Elon Musk tweeted, hey, this Tesla stock price is too high, in my opinion. The stock price was down. And then look, in the subsequent months, it just ripped higher. And so StockTwits is saying Elon Musk is the worst analyst of all time, which is funny because he's clearly brilliant. But I really enjoyed this guy's reply here. I'm not going to use the colorful language he used, but he's saying that he baited the short sellers to go big against the stock, and he's playing 4D chess while these funds play checkers. And the idea being that Elon Musk purposely did this to get short sellers interested, so that way there'd be a short squeeze in the future where as Tesla delivered, they would have so much, they'd have to buy back their shares because they shorted them. They'd have to buy back, and that combination of the natural buyers and sellers plus the forced buyers, because the short sellers are covering their position, could cause the stock to go parabolic. And maybe there's truth to that. Like, let's that he's not the only one that thinks that. Here's this guy Ross Gerber. He says, is there Tesla news, or is it the final capitulation of short sellers who are now buying back because they have to? That's a very real possibility. Maybe they have to because they're in, like, this has been a world of pain for short sellers that, like, they saw that, they're like, oh yeah, let's pile in, and now it's literally 100% higher from when he said it was too high. And so then, who likes shorts? So in honor of this, Elon Musk in the last week or so has announced that Tesla is going to start selling sexy shorts at the price of $69,420. $420, I think, is the price that he was talking about taking Tesla private, which is kind of funny. Obviously, the price of $1,500 is a lot better than $420. And this is a little bit of hubris here, saying like, hey, I'm going to rub it in the short seller's face that the stock has done so well, that the company's doing so well. Really, it's the stock's doing so well. The operational results in the first quarter weren't that impressive because they're fighting COVID. But over a multi-year perspective, they're crushing it. But this is, they're purposely now selling shorts on the Tesla website, which is hilarious. In particular, this is targeting hedge fund manager David Einhorn, who's penned several times that he's short Tesla. And from my perspective, I try to stay out of shorts. That's Charlie Munger over there, who's one of my life heroes, where he wrote where he said short selling is trading agony for money. And that's anyone that was part of this ride here, where you watch the stock price just rocket higher. That is not fun. You are definitely trading agony for money. And honestly, that's not the game I personally like. That is not how I want to spend my life, like trying to bet against entrepreneurs that are trying to make the world a better place. I would much rather own companies where I'm excited about the innovation they're bringing to the world, and they have this wide open opportunity. Like, you want to win with other people. You don't want to bet against companies that are actively trying to do things. Now, I get short sellers that are calling out frauds like Wirecard, and some people have argued, maybe Elon Musk is a fraud, but I think it doesn't seem likely in my mind. That's my own personal opinion. Like, look, this guy's freaking landing rockets in the middle of the ocean. What have these short sellers done? And so, could the stock go down? Absolutely. Does Elon Musk get overly promotional, or is time frames too quick or too soon sometimes? Absolutely. But is he a genius inventor that's trying to make the world a better place? Yeah, I think so. But yeah, also the stock has gone parabolic straight up, literally up from 200 something to over 1500 in a year. That is not natural. So could it go down? Could it reverse course? Yeah. The company's fundamentals did not grow by 5x in a year. There's a lot of valuation expansion there. So where do you go from here? You're looking at literally, it's been a roller coaster ride for investors, up and down. Do you go higher from here, or is it just a painful ride? And the funny thing is, even the pros don't know. Here's one tweet from a Rational Walk where he goes, "Super useful analyst report on Tesla." I'm pretty sure this is the Morgan Stanley analyst. He goes, "Our bull case valuation for Tesla is over 2,000, and our bear case is $280." I mean, look at the valuation range, like $300 to $2,000. So even the pros, this guy, Adam Jonas, he is a professional sell side analyst. This is what he does for a living. This is how he spends his hours of the day. And his conclusion is it's a wide freaking range of where this company's worth and where it can trade. So when you hear things like that, it's probably worth understanding that you're in a situation where valuation is driving your results, and it's not necessarily about, like, hey, what are the fundamentals day to day? Like right now, when a price goes from 700 to 1500 over the course of a couple of months, that's valuation. That's animal spirits. And in the short term or intermediate term, no one has any idea where it's going to go. And even the so-called pros, here it is, the global head of auto research for Morgan Stanley. He has no clue, and instead of saying I don't have a clue, he puts a wide range on it. So you as an investor, if you're trying to figure it out, good luck. And like, to take a step back though, does Tesla have an unrivaled value proposition? I would think so. At least at this point, look at that Model S. That is a sexy car. And they've certainly taken sexy and applied it to electric vehicles, which is not really something like the Prius isn't a sexy car. Now you do see some high-end competitors now trying to compete, but by and large, like, look at their growth from 2017 through now, and this is on a trailing 12-month basis. But their number of vehicle deliveries has gone from 100,000 to 400,000. That is a 4x improvement. Over a couple of years. That is the type of fundamental growth that does drive, market. And when you see this means you're taking market share. It's not like the market's growing by 4x. So the question is, does Elon Musk pull it off where, they can go from 400,000 to 4 million to 10 million in the future? And there's a lot of other components that are going to be driving, Tesla's value. But just from a high level perspective, not going super deep here, just looking at the figures, it is showing that they do have a value proposition that's winning. I mean, that you can't argue with that. This means they have a value proposition that's winning in the marketplace. Is it unrivaled? Is it super duper strong? Those are tougher questions to answer, and we could get into that, on a next video. Right now it's around a $300 billion valuation for the whole company. Where to from here? When you get to a company of this size, it certainly does get harder, to go from, let's say, 300 billion to, $3 trillion. That would be a 10 bagger. And that's, how many $3 trillion companies are there right now? There's none. Is it possible? It is, but the probability is low. So I would argue that, if you're playing the investing game, you have to think of this from an odds perspective of, is it easier to find a company that's $3 billion that can turn to 30 billion or 300, or do you start off with a company that's 300 billion and bank on it going to a trillion or 3 trillion? And so ultimately, it's a tough bet. Elon Musk has clearly done an amazing job, And I'll save my valuation thoughts for another post. But first, you have to subscribe. So make a point to subscribe right now. And if I see enough subscribers, then I'll do a detailed post on my thoughts on valuation. Also, if you like multi-baggers, if you like trying to find companies, or you like me sharing my personal financial journey, subscribe to this channel. The most recent post was on Despegar, which is a company that, I articulate could potentially have 300% upside. It's down, 80%. It's a position that I do own, and clients of Unrivaled Capital also own. But I'm trying to share, like, hey, these are companies that do have multi-bagger potential, and they're worth exploring, or worth at least learning about. And thank you so much for watching.